All right, so we had a crazy week in the markets. Stock market was up quite nicely. Bitcoin being down a lot was, I think, probably the biggest news. I want to talk about that. I want to talk about stocks. I want to talk about earnings. We are back into earnings season. First things first, if you get value out of the video, please like and subscribe. Check out the links below as always. So I want to get into stocks first because, like I said, we are back into earnings. We had bank earnings and we also had some other big companies that released. So if we look at the stock market for this past week, S&P was up about 1.75%. The NASDAQ was up a little over 2%. International was actually up a little over 2%. The NASDAQ growth definitely outperformed. The MIG 7 definitely did better than 2%. So that's what we have as far as stocks going forward. I honestly, when you're looking at the short term, whether it comes to stocks, whether it comes to Bitcoin, I really don't know what's going to happen. But the one thing that I'm fairly confident in is over the long run, stocks will be up and Bitcoin will be up even more than that. But the thing is, though, is that it could be very volatile during that period of time. But like I said, stocks were up. It shook off the news from last week. Trump kind of walked things back a little bit, but he is kind of floating, it wouldn't surprise, like he said specifically, he's still not taking 100% tariffs off the table. So I think that that's just his way of bargaining. But again, stranger things have happened. So we will see how that goes. But unless there is something unexpected, I'm still thinking we close the year. I still think we trend up towards the end of the year because we're going to get rate cuts. The Fed is actually still doing QT, I believe. So they're going to be rolling that back, which means we should get more liquidity in the markets. So I still think that the most likely scenario is up, but again, nobody knows. So let's get into the earnings, then I'll get into some other things. The first one here is JP Morgan. They actually beat earnings and revenue. However, they were down on the week. This is a good company. Obviously, the biggest bank, I believe they're the biggest bank in the world. I would buy them if the price was right, but I think they're a little expensive where they're at right now. The next one is Domino's. This is another one that I think is a good buy at the right price. I think they're a touch expensive where they're at right now, but they did beat earnings and revenue. They were up on the week. Out of curiosity, they are actually below their historical valuations, but they're still trading at a PE of just under 24, which I think is a little expensive. I would probably pick them up if they went below 20. That's roughly where I would look at picking them up. The next one is BlackRock. Another one that I would buy if the price was right. They actually hit a new all-time high this week. This week, it looks like it was right after that earnings news. They did pull back a little bit since then, but they did close the week up. Also beat earnings and revenue. Next one is Citibank or Citigroup. They beat earnings and revenue. They were up on the week, although it looks like they pulled back a little from their high. Wells Fargo, I believe, is a similar scenario. Beat earnings and revenue. Yeah, similar scenario. The next one is Abbott Laboratories. This is a company I really like. I think they're a touch expensive where they're at right now. They missed earnings slightly. Revenue is basically in line. I still like this company. I mean, they have a 6.25 earnings yield, which is really good. I think they're in an industry that's going to do very well. I still think they're a touch expensive, even though they're at a 16 PE. I still want to get them a little bit cheaper, right? Honestly, I have a price target right around 120. That's where I'd look to pick them up, but I really do like them long term. Another one that I like long term, ASML. This is one that I actually was buying right around when it had its dip. I think it was around 650, 700 it dipped to. Actually, no, it was even lower than that. Earlier this year, I picked up a decent amount. It would have been right around in here when it had this dip back in April. I picked up a decent amount. I sold it recently around $900. It's actually ran up over $1,000. So I've missed out on a little bit of upside, but I think it's just too expensive where it's at right now. Although this is one that I definitely would be buying. If it pulled back below probably 800, I would start to buy it again. And it did beat earnings and revenue. The next one is PLD. I believe they're the biggest REIT in the U.S. They beat on their FFO. They're not earnings, they're FFO. I'm not a huge fan of them though. I think that they're a decent company, but I just think that they're a little boring, and I think there's just better options. The next one is United Airlines. I watch them because again, airlines are a good barometer on how the economy is doing. They actually released pretty good earnings, and they were up on that news, although it looks like they had, what did they do during the week? They're actually down in the week, sorry. But they were up on that earnings news, so they sold off later in the week. TSM, this is another company that I really like that I sold recently. I was buying it, I remember buying it in the like the mid, like 170, 180. I know that's roughly where it was this year. I believe that's the low it was this year. Actually, no, it was like 150. So I was buying it at like 170, 180. I bought it all the way up to about 250, sold it, and I would buy it. If it went below, I think like 240 or so probably is about fair value. If I look at its earnings here, it's about 11% above its historical average. I think it probably is worth a 20 or a 21 PE. So it'd probably have to pull back like 15% for it to be worth it for me. So nothing too crazy, but I do think it's a really good company. And the last one here is American Express. Another one that I did own a good amount of going into the year, and up until probably early summer, I sold it just because I thought it was too expensive. I think American Express is a phenomenal company. I know Warren Buffett always talks about how good of a company it is. They beat earnings and revenue. They're actually up a lot since that after its earnings came out. It was up about a little over 8%. So this is a really good company. I mean, the credit card companies are all good companies, but this one I think is exceptionally good. They are considerably overvalued, I think, though. So they'd probably have to pull back till like, I think I sold it around like 280, 290, and it arguably was a little expensive there. So I think it would have to pull back to probably 270 or so for me to want to buy it. But I definitely would buy it if it got cheap enough because I think they're a really, really good company. Let's get into some Bitcoin news. So Bitcoin obviously sold off significantly this week, and really, I don't think there's a clear reason for it. I just think that there's a lot of uncertainty out there right now. I mean, it sold off a lot on the Trump potential tariff news, but then it went right back up to 115 or so, and it sold right back down to about 105. We're back up to about 107 108 at the time of me making this video. So we broke that 107, to 108 area of support. The next support, obviously, I think is around 100. And something tells me that there's a lot of limit buy orders at 100 or 101. So barring a significant correction in the stock market or something completely unforeseen, like a black swan, I would be surprised if we went below 100. The only way that I think we go below 100, I think, is a significant correction in the stock market or a worse than expected recession, which both of those things could easily happen. I'm not saying they can't happen. I just think it's unlikely. And I think that there's also a lot of bid for Bitcoin, right? I think that there's a lot of people a lot more people that are buying. And the one thing though is retail hasn't been buying. I mean, if you look at Google searches for like buy Bitcoin or how to buy Bitcoin, stuff like that, it's like half of what it was at its peak back in 2021. So what does that tell me? That makes me think that I still think we have a lot of room to run here. Now, again, I know a lot of people are saying, oh, if you look at the historical peaks in the market, it's usually like, November, December, January of, it would be this year, that odd number year after the halving. The difference being is, number one, I'm a believer in the idea that I think that the traditional cycles are going to be a thing of the past. Not that they're completely going to go away. I just think they're going to be less pronounced. Number one, because the amount of new Bitcoin coming online every block is literally being cut in half, right? So it's pretty hard to say that there's going to be this massive market shift when you went from 50 to 25 to 12.5 to 6.25 to 3.125 to 1.56, whatever. Like, the amount is less every time. So I think that it's completely insane to suggest that the traditional cycles won't be a thing of the past. If you want to say that they still are, just down the road they're not going to be, I think that's fair to say. But right now, I think it's insane to say that at some point the traditional cycles are going to go away, because obviously the amount of new Bitcoin coming online is getting smaller and smaller and smaller over time, which means it's going to become less and less noticeable over time. So I do think that the market cycles are a thing of the past. I think that the most likely scenario is we're going to see these periods where we chop sideways for a little bit, and then we see big run-ups over short periods of time, and we chop sideways, and so. We'll have pullbacks in there sometime. But I think that the traditional cycles are going to be a thing of the past. And the reason for that is, number one, all of the institutional buying reduces volatility. It reduces the massive runs up, and it reduces the massive downturns. So that's what I think is happening as far as that goes. I still think that we're going to see something big over the next 3, 4, 5, 6 months, and I think we're going to have a big run up. But again, anything can happen. The next thing I wanted to talk about here is from Grant Cardone. Now, Grant Cardone is doing something that I think is genius, like absolute genius. I think we might look back at this and think that this is every bit as much of a genius idea as what Michael Saylor is doing. So basically what he's doing is, obviously he's a real estate guy. I probably shouldn't have to explain that, but for those of the people that don't, he is a massive real estate investor. His company, which he runs, owns like tens of thousands of, I believe they're almost exclusively, if not exclusively, apartment buildings or like condos. And what he has started to do is, when he goes to buy a new property, he will, let's say he wants, I don't know, $100 million. He will put, I believe the number is 62 into the real estate and 38 into Bitcoin. He will put, so it's going to be $62 million into the property and $38 million into the Bitcoin. And why is this genius? This is genius because, number one, he's borrowing money probably at like a low to mid single digit rate. We're probably talking, 4 or 5%. He's borrowing money at 4 or 5%, and he's putting that money into real estate, and he's putting that money into Bitcoin. Why is that genius? Number one, because he can grow the value of the real estate faster than that 4 or 5%. But even more important, Bitcoin's going to go up a heck of a lot more than 4 or 5%, which means they're literally getting paid to borrow money. And what does that mean? They can continue to funnel more and more money over time into Bitcoin and into real estate. And not to mention, too, on top of that, his properties are profitable, right? He is getting rent checks that are more than what the cost of the upkeep is for the buildings every month. And what does he do with that money? Some of it he puts into Bitcoin. So I think that this is an absolute genius idea. I believe he said he's planning on going public at some point, which I almost certainly will buy into that. But this is going to be another way of doing things, right? And this is something that I'm a huge fan of, because a lot of people are talking about how great what amazing thing it is that Strategy and Metaplanet and some of them are doing, which I agree with, at least for the bigger ones. But I think that this is another example. Like, I think another really a really good idea would be to, buy stocks, buy dividend stocks, sell options on them, and use that money to buy Bitcoin. I think that's another phenomenal idea that nobody really is doing yet. And this is a testament to just how early we are. A lot of people think that the point of, diminishing returns has already came and gone with Bitcoin, but I don't even think we're close to that yet. I don't even think we're close to that yet, because look at how few publicly traded companies own Bitcoin. Look at how few people are doing the Grant Cardone strategy. Like, very few. So I think we still have a lot of room to run. And again, mark my words, I think that this is going to go down as another just absolute genius strategy. The next thing from Michael Saylor, by the time your financial advisor says it's okay to buy Bitcoin, it will cost $1 million. When they say it's a good idea, it'll be $10 million. And I think that this is 100% spot on in that virtually no financial advisors right now are recommending Bitcoin. Even if you bring it up and say, hey, I want to buy Bitcoin, a lot of them still will say, and in fact, the clear majority of them still will say, I don't want anything to do with that. And if they do, it's okay. It's going to be 1 or 2% and put it into IBIT, right? Which again, is not the end of the world. Buying IBIT is better than not having any exposure to Bitcoin. Buying MSTR is better than not having any exposure to Bitcoin. But at the end of the day, the best thing is cold storage. But the main point here is, this is why I just said we're still so early. A lot of people wonder, when are we going to see the point of diminishing returns with Bitcoin? And my hypothesis for that has always been, when financial advisors are recommending, even if it's like 5, 10%, I think the number should be a little bit higher. But even if that's the number, when they're doing that without even thinking about it, when pension funds are buying Bitcoin without even thinking about it, when insurance companies are buying it without even thinking about it, when it's at the point to where it's assumed that you allocate a percentage towards Bitcoin and that number is more than 1 or 2%, then we'll know that we might have reached the point of diminishing returns. But again, you have to think of it in logical terms here, because with Bitcoin, there's only going to be a certain amount of Bitcoin, right? You cannot make new Bitcoin. So I don't think we ever reach a point of diminishing returns, but I do think we reach a point to where we might see, rather than 30, 40, 50% returns, you're down to 20, 25, 30. But until that happens, I don't think we've gone there. And this is an interesting point here. Each bear market floor is higher on the year. So again, basically, this is the lowest that Bitcoin has ever traded during each calendar year. Obviously, this isn't an exact number, but it's close enough. So if we go back, 2015, $185, 2016, $365, 2017, $780, 2018, $3,200, 2019, $3,400, 2020, $5,000, 2021, $28,000, 2022, $15.4, 2023, $16.4, 2023, $38.5, 2025, $75. So what do you notice here? This is about the most obvious up and to the right chart in the history of charts. And this is not going to change, right? The 2025 number is probably going to be in the 6 figures, right? If not, it's going to be very high 5 figures. And the 2026 chart probably is higher. Sorry, the 2027 probably a little higher, right? Maybe 2027 is a little bit lower, right? Because we do see pullbacks every now and then. But the chart is still up and to the right, very obviously, right? Very obviously. And this is not going to change, right? This is not going to change. This is going to keep going. The last thing here is BlackRock CEO, crypto wallets surpass 4 trillion. Asset tokenization is the next financial revolution. So I'm not a fan of crypto. I think that Bitcoin, it's Bitcoin or bust. All the other cryptos are trash. They're all inferior to Bitcoin in some way, shape, or form, or if not every way, shape, or form. But why is this important? This is important because BlackRock is the largest asset manager in the world. And the fact that they're very clearly, not only are they accepting Bitcoin, they're doubling down on Bitcoin, right? They're opening more funds across the world. They're coming out with a dividend fund by the looks of things as well. It's pretty hard to argue that Bitcoin's not going to keep outperforming when you have the largest asset manager in the world talking fairly positively about it. And just to put it into perspective, if you'd have told someone 5 years ago that this is how they would be talking, that this is how they would be going about things, you would be shocked. I would be shocked. Even the biggest Bitcoin bulls on the world, they probably still would be shocked about this. So I just wanted to bring this up for all the doubters out there. It's like the largest asset manager in the world is clearly doubling down on this. Why would you still not be supportive of this asset? So Anyway, that's what I wanted to bring up today. If you liked the video, please like and subscribe. Check out those links below and stay tuned for more.